Hey, good morning, everybody. It is Tuesday, August 2nd, 2023. Let's go ahead and jump right into our review here this morning so we can get into the pre-market for this morning. Yesterday was, in my opinion, one of those hard days, right? So we talked 2 weekly webinars ago. I believe we talked about easy days versus hard days. And so yesterday, in my opinion, was a really, really difficult day. We didn't go anywhere, it kind of chopped around. And if we go up to the higher time frames and take a look at the context that we were trading within, I did tell you guys that inside of the pocket here from last week's high, where we had the dotted red line up top, and last week's low, the dotted red line at the bottom, inside of there with all this chop going on with so many conflicting signals for the bulls and the bears, it was probably going to be a choppy situation. And until we could break through the highs of last week or break back below the lows of last week, we really didn't have anything lining up. So let's take a look at what happened here yesterday. And there were some decent things that did occur, but again, it was super, super messy. So let's take a look. In the overnight session, the sexiest stuff really occurred. We had a beautiful hold right off the 200. In the overnight session, it was a 38% retracement of the whole leg down there. So beautiful confluence there. There was even a major bearish divergence as it was testing into the 200 there. That was in the middle of the night, so I don't expect all of you to be there. This was about 7 a.m. on the East Coast, so really early for those that are maybe trying to find some trades before they head out to work. That actually would have been probably one of the best trades you could have took yesterday. And that was a good, I would say, just about, 20 to 25 point pullback. And interestingly enough, and we talked about this in the pre-market yesterday, we came down, and where did we hold on this big sell-off in the overnight session? We held right off of the 50% retrace of last week that we've been watching and talking about. And talking about from the context of the higher time frames up here, that getting down below 50% of last week's price action was our first clue that there could potentially be a deeper pullback, right? So that would be that first dividing line or line in the sand. So what happened? They came down, they held it nearly to the tick, and then the market opened here. There actually was a beautiful parry right off the 200 just as the market opened that I told you guys about. It didn't quite get anywhere, right? It pulled back and basically held the FMA, right? By 2 or 3 ticks, ducked below the FMA, and we got this really nice kind of ride all the way up. Now, when they got to the VWAP, got a little bit of trouble, and this is what I mean by messy. It looked like we might pull back from there, and then what happened was, if you look at your fibs, if you were watching the fib up for the morning, we pulled back nearly to the tick, to the 38 retrace there, and basically the 200 moving average. In fact, if you bought the 200 moving average, if this is all you saw, and you saw the market starting to push up, breaking out through VWAP there, that pullback right to the 200 would have been a really, really great opportunity because it never broke by more than 2 points, right? It came down, held to the tick on the first test, ducked below it, again, just a couple ticks below, and then came up and came right up into the holy orange power level. So you could have grabbed a decent, say, 5, 6, 7, 8 point trade up. The problem was, it all petered out right after that and sold off. So selling the back end of the holy orange power level probably would have been a better trade. But again, it was super choppy. We had no bias yesterday. Remember, some mornings we come in and everything lines up. We see everything lining up for the bulls or everything lining up for the bears, and it gives us a little bit of a bias, at least until certain levels hold or don't hold, and then we have to change the picture. But yesterday it was basically a crapshoot. So whether you bought or sold that, who knows? And here you can see just the whole day just, comes down, comes back up, comes down, comes back all the way back up. It was a total chop fest. So a very difficult day yesterday. If you zoom out and look, we held 50% of last week many times. And then I guess actually in the overnight session here, we finally ducked back below. So it's not surprising that we played there and even held it to the tick on a couple tests all yesterday, and then finally In the overnight session, they brought it back down lower. There were some beautiful little holds here right off the VWAP. If you were measuring the leg down as the market failed, right around the holy orange power level, and that was also the 50% retracement yesterday. If you guys remember, we put up the 38, the 50, and the 61. We talked about these being some very important areas for the bears to defend if they were going to stay strong. Well, 50% was nearly exactly the holy orange power level yesterday. And as you can see, I circled it here, came right to it. Yeah, it ducked through by a little bit. I think it was exactly a 2-point break, and then went ahead and sold off. So some decent holds there, some decent holds here. Again, if you were measuring the leg down, 61.8 retracement was lining up nearly perfectly here with our VWAP. So shorting that area, especially just from a context perspective, seeing the market fail from the highs of the day before in the overnight session, failing off the 200, failing right off the holy orange power level, and again, the 50% retracement back down right off of it, and then seeing us fail again off the VWAP here might have been a clue for you to try that area as a bear to see if the market would continue to push lower, and sure enough, held nearly within a tick or two off the 61.8 and the VWAP there, and got our pullback. But again, it was very choppy, so just as soon as you thought you were going to get a nice 20-30 point push for your trade, it came right back up, right? And then came back up. Nice little parry off the VWAP and the 200 on the upside, and then went sideways. So it was just a total disaster. With that being said, that's how the market is. Some days are super easy. That's where you want to be making your money. And we talked about this. If you haven't watched the weekly webinars for the last couple weeks, I would go back and watch Easy Day, Hard Day, just to give you this idea that on the easy days, that's where you're going to make your money. On these hard days, unless you catch one of these rotations really nicely in some of these areas that I mentioned, it's going to be a tough day. And when you start to have trouble, that's when it separates the wheat from the chaff, from the real traders from the amateurs, right? When you start to see that things aren't working, or you start to get psychologically freaked out, you start getting, emotionally attached to trades and to losses, you need to step away, right? If things aren't working out, you need to just accept that it's a hard day, nothing's working, walk away, protect your capital. The number one thing that a trader needs to do as a risk manager is protect your capital. All right, so I took a loss, and I took a second loss, and I said, you know what? This isn't working out for me. I'm going to move away. All right, again, still some decent opportunities, but I got in on some bad trades. So that's how it works some days. Now, coming into this morning, a beautiful parry. Again, the overnight sessions, for whatever reason, have some unbelievable, holds off of these levels that we watch. So let's take a look. Just like the overnight session going into yesterday morning, where we had some really beautiful holds off of our moving averages, let's look at what happened here in the overnight session, and then we'll get into our pre-market this morning. So, bam, right there, overnight session. It was about, I think, 6:30 my time. What is that? 9:30 on the East Coast there, right to the 200 moving average to the tick. And this is not anything surprising. We see the hold off the 200 to the tick nearly every single day. So if you were looking for a trade last night, that would have been the moneymaker right there. And you could have rode this all the way down, never broke, tested and broke from there. If you look, if you look at this last push down last night, that was literally to the tick, this 61.8 retrace as well. So if you were measuring this last leg down from the session yesterday down to the overnight low, that was a near perfect 61.8 retrace, lining up perfectly with the 200 moving average. So that was a great opportunity. If we just scroll backwards a little bit here, coming into the overnight session here, look what happened. We had our push up. So let's say you were watching this in the afternoon session and you were watching this leg up. If you just threw your fib up, and let me move this one out of the way, just threw your fib up, what was the 38 to 50% retrace? The VWAP. And what happened? To the tick, off VWAP, literally to the tick. Then we pop a little bit higher, remeasure your fib. Guess what happens? We pull back, right to the 38 retrace to the tick and the VWAP again, right? So two perfect opportunities here in the first few hours of the overnight session. Even a nice parry right off the FMA to get short back to VWAP if you were looking for a little scalp that way. So there is that beautiful hold. And then there is a beautiful hold off VWAP to the downside as the market started to fail back down. All right, and notice the orientation of the two moving averages. We talk about this in some of our weekly webinars, and if you take the course, we get deep into it, all that stuff, right? So beautiful hold there. I think it was even just shy of a 38 retrace, or exactly a 38% retracement of this overnight leg down. All right, so all these type of things you want to be aware of, looking for these ratios, looking for key levels that we know are very strong, and they're not going to work every time. If you tried the third test, there's the first test of VWAP, there's the second. When we finally got up and failed off the 200, there's the 38 in VWAP. The third time it didn't work. So you had an opportunity there, and this one failed. And interestingly enough, it was right off of parry off the 200 for the push lower, right? So that's trading. Now we came, as it fell down, we kept holding the FMA, and then what do you know? Coming into this morning, the market comes and bounces right off the low we've been watching for a couple days now. So right off the low, a couple ticks, and then we start to parry up. And guess what happens? We come up in the overnight session last night, if you were watching your fibs, and tested the 38 retrace to the tick for this pullback. So coming into the open here this morning, we've got 3 retracements above that will be the most important areas in terms of Fibonacci's and this 50% psych level. And again, that first level, 45, 83, 75, I think we tested it nearly to the tick or turned it just one tick in front of it here for this deep pullback coming into the open. So pretty good stuff here in the overnight sessions. This is all just, if you go back and you review the charts with these levels, you're going to see this type of stuff all the time. So let's go into this pre-market for this morning.